Hello everyone and welcome to the PivotBoss Market Outlook for November 2025. Thank you very much for joining me here this afternoon. It is November 5th, 2025 on a Wednesday. The market here closing up with the closing bell just minutes ago. And a late day tumble for these markets here. If we take a look at the quick intraday charts, here in Thinkorswim, you'll notice right there, little late day slide back to VWAP here for the ES. A bit of a box that developed here for multiple hours and then a slide back to value. Over here, we also saw a box develop here for multiple hours in the YM. A little bit of a slide, not much compared to the others. This one over here kind of led higher. This is the NQ for much of the day. Quiet range, late day dump. So giving back some of those early gains, and this was something we talked about in our trading room here this afternoon, is these look good, but you know, are these good enough to lead to further upside? Do we need to be patient on these? Are we about to see a failure of these days tomorrow? We talked about the idea of looking for a failed new high. Any failure to hold today's midpoint tomorrow would be highly bearish. So these are some things we'll talk about here. But again, welcome. My name is Frank Ochoa, also known as Pivot Boss. I wrote a book called Secrets of a Pivot Boss. You can find it at my website, pivotboss.com, also on amazon.com, other outlets as well. Welcome. We also have a Discord trading room, the premium trading room, which you can find. I'll put it in the link in the description below here. But some of you right now, here we go. Some of you are joining us from the trading room. Some of you are on the Zoom link. Welcome to both sides here. At the moment, we're going to start at the top of our agenda here, which, number one, let's go down the agenda for the moment. We have quite a bit of things that we're going to be looking at. Number one, just general futures analysis with the ES, the NQ, YM, the Russell. We're also going to look at crude oil and gold. We'll give you some short-term directional ideas in place for those, and then we're also going to look at some longer-term directional targets for those markets. We're also going to talk crypto, including Bitcoin, Ethereum, and XRP. I'll give you the key levels, the key ranges as well, and then we're also going to talk long-term potential entries for those, because there's some big-time percentage returns that could be ahead. But how far do we dip first, or is the low in with the recent bounce? We'll talk about that. We'll look at some of the Mag 7 stocks. We'll look at various industry groups. So we'll do an industry group spotlight for nuclear, modest AI stuff, some crypto, a little bit of quantum. And as always, I'll take any requests. So if you have any specific or particular tickers you'd like me to look at, go ahead and put it in the chat. Whether you're in the trading room chat or whether you're in the Zoom chat, either way, I'll be monitoring both sides so that we can get your requests in. All right, without further ado, let's go ahead and begin here at the top of the agenda, which is some of the futures analysis here. I'm going to bring this back over this way. We're going to start with the ES, the S&P 500. This is the daily time frame of the S&P 500. By the way, I know we haven't done a market outlook in quite a while. The last time we did a market outlook, we were pretty much spot on in terms of many of the groups to look at and what to look for. Our August call on the August low was right on. April low. That April 7th low right there, we call it as the day one entry, especially for the best stocks out there, including NVIDIA, which we had as our A1 candidate for the day, and then anything else that we had identified for potential doubles. Since then, tremendous strength back to our targets. From the low, initially looking for a push back to the recent highs, and maybe a little bit beyond the highs. But to see the melt up extend since then has been incredible, rather breathtaking the way that that's played out. This right here is volume weighted average price, and these are the standard deviation bands above and below price. I call them my PivotBoss bands. And this is 3 standard deviations above. This is 4 standard deviations above. And when we came down with a big sell-off below 3 standards and then bounced off of the 3rd standard here, we noted at the time that that signal right there suggests a move not only back to VWAP but across the range. And we completed that here. And I mentioned at the time, for all intents and purposes, that trade has now been completed. That idea. But that doesn't mean that the melt-up can't extend, even well beyond where we think. And that's been the case here. We've seen a continuation to the upside in a big way. This thing has continued to melt up in a big way. And again, at what point do we find a high? One of the things we've continued to mention in our trading room is the old adage that markets can remain irrational far longer than you can remain solvent. So even if you think this is an irrational move up, it can continue to be that way and melt up. It's not super irrational overall, though. When you look at it from kind of a value standpoint, it's above the 3rd standard deviation right now and marching higher, and that's a price discovery phase. And when you look at the ES right now, the next level up is 7,000 by way of market structure. So we have some levels that are all pointing to 7,000 in the near term. 6,200 here was the breakout. You add 400, that's 6,600. So every 400 points is a major market structure level here for the ES. Every 400 points. And right now, upon crossing 6,600, the retest of 6,600 takes us to 7,000. That's the next level up. If we fail at 6,600, that would suggest a move back across the recent lowest market structure, which would take you back towards 6,200. And you have a rising 200-day and a rising year-to-date VWAP as well to come meet at the spot right here. So if you're thinking about where long-term value is, it's quite a bit lower. We have rotated quite a bit off those levels, and at some point you would anticipate that we do see a reversion to the mean at some point. But when? Is it now? Are we building into that? My initial thoughts here are that we continue to drive higher until it proves otherwise. But even on massive pullback days like this, we're still relatively bullish. But this development here, the way it's playing out recently, the stop run day yesterday, today's very bullish recovery, but it wasn't the strongest, which we noted in our trading room today. You know, like this, and then many, many hours like this. It was impressive that it bounced, but man, it gave it back pretty quickly. Is this an indication that we are about to really drive down again up ahead? If you want a level to watch, it could be the key range high here. That's the Friday high on the massive sell-off day. That's 6806.75. Because if we fail there in a big way, it opens up the midpoint of that key range, which is the midpoint of that day, and then perhaps the bottom of that range. So there's 2 big levels that could be ahead if we fail here. And we're kind of hanging on barely, but we could definitely see that fail. So that midpoint is going to be very, very important here up ahead for this market and for the ES. Let's just talk one last thing here. So on the short term, if this is the key range we're following at the moment, and that's just a 1-day key range. I could open it up a little bit more, but let's just use the 1-day key range. 70.73 is the 100% target, which means, in essence, we could still drop all the way down to 64.74 and still be an opportunity to go this way. Especially if we expand the range a bit. So, you know, this market's still very bullish, still a lot of good grace within this uptrend. But like I said, from a longer term perspective, we're at very risky levels overall. So anything to the upside might be very, very short term oriented. Still, just keep it on a 5 to 10 day swing, things like that, because we are marching higher towards 7,000 and 70.73. Tomorrow will be very, very important to see how we play out, to see, okay, does this low hold and we work our way higher, or do we fail and rotate a bit deeper? So looking at this, I want to call out one final longer term level. The longer term level right here is 7,500. 7,500. That's your long-term target from this year's impulse sell-off. If you want to call it an impulse sell-off, which I am, you have yourself a pretty big deep pullback to begin the year. This is a weekly time frame here. 1 week chart. From that high, this thing sells off and you get the April low, and then you bounce back to the midpoint of that impulse move. It then races to the top and then through the top without ever retesting. It's just a very massive continuation. And we're almost a couple of distributions up. This is so bullish here. But that key range still suggests a little bit more to go. This is the 50% extension. We're only halfway to the target, basically, from the breakout point. There could still be more to the end of the year and into the Q1 of next year if it wants to continue on this pace. And can it continue on this pace? Absolutely. Absolutely, it can continue on this pace. If you look back last year, look at this right here. From this pullback low, remember that weird August low? Steady continuation, little pullback, steady continuation, and it was until that high. In terms of duration, that's a long time. This is 2023, August, and that's February of 25. That's over a year of that similar melt-up phase. Why can't this one be similar? So we could certainly see this thing continue to melt up towards 7,500. 7,400 would be the next market structure level above 7,000. So from a long-term perspective, big time. Now I'm spending a lot more time on the ES here. Everything else will be kind of translated very quickly. But I do want to show one final thing. If you look back to the 2020 meltdown, when we have COVID here, okay, let's just look at it kind of like this view right here. We'll do the prior pivot low. There's a prior pivot low, long-term up move, and then impulse sell-off. COVID happens, and then here's a prior pivot low, strong high, impulse sell-off right here. Very strong low, very strong low. Impulse move, impulse move. We get back to the high very quickly that year. Back to the high, especially the best things, right? Same thing here, back to the high very quickly. And then once you decide to expand through the high, as we did here, look at the move afterward. That was a 2.5-year rally afterward. That's incredible. You could take this measurement and forecast it up, and it'll get you somewhere in there. We can do that measurement, but just trust me on that. Over here, we've done the measurement here, and we're only a little bit up. Look how much more we can be throughout or beyond that prior pivot high. So when we take this in just recent historical context here, strong move up, strong high, big impulse move back to the middle, back to and through the high, we still have the potential to really continue to grind higher if this thing really wanted to. So those are some thoughts on the longer term view of this thing. Last point I'll make on the ES and I'll move on. That high where we broke out from, theoretically speaking, we can drop into that low or into that prior high. We can drop as low as that prior high with a rising value and it still be a tremendous buying opportunity to this pivot high, and then beyond it, much in the same way this happened as well. So 6,200 could be a long-term idea. Not thinking 6,200 anytime soon, but the signs will be there when and should it develop in that way. So I wanted to give you some good long-term potential here and some key ranges, some major market structure levels that we're watching here. The way we finish the day here from a tomorrow standpoint, today's midpoint is going to be very, very important. Today's midpoint is right here, which is 6803. That's going to be a very important mid right there, because if we fail, things can get pretty dicey pretty fast. I think I moved that. There it is, something like this. Maybe a little lower. There it is. That's the ES. If we look at the NQ, obviously highly, highly dominated by tech, AI, Mag 7. You're seeing all of it. You're seeing all of it. This thing has been on fire to the upside as well. And you can certainly see that this thing has been up and to the right ever since the big time pullback that we had to begin the year. And this one's closing in on that 100% target as well. 7,500 is the target for the ES. This one is 28,150. This is the top of that range, so that large pullback. So theoretically speaking, 6,200 in the ES, it would be equivalent to about 22,000 in the NQ. I don't know. I don't foresee that now. But at some point, if we get one of these rotations into that zone, that could be the next push back to the level and through the level. Big time long-term buying opportunity could be there on a discount of that magnitude. But right now, still trending up. Look at the daily time frame here. Very bullish overall. To be in this zone can seem overvalued, and it is, but it's also a very mature price discovery phase. Very mature price discovery phase here with this continuation playing out. It can continue to go in that way. It's a very organized move. It's not 8 standard deviations overdone because some skyrocketing price. This is very good price discovery. At some point, yes, again, it'll fail here, and that's when you get your recovery back down. Again, like I said, not anticipating that right now, but do we see something like that soon? Yeah, it's incredible how that third standard deviation like that just continues to be in play. It hugs it, as you say right there, Fig. Incredible. At some point, like I said, it will take it offered and recover. And we got that big pullback coming. But, man, right now, still very bullish and could continue to get bullish. That key range right there is going to be very important, the short-term key range here. And for tomorrow, this is where, what if we do get that sell-off in the near term? The key range high, again, is here. Key range low is there. The midpoint is right there. Tomorrow, do we get a failed new high that sees rejection above that high? So that a failed new high would be price pushing above that previous high and then rejecting prices above that high and dropping back below it. That right there, for example, is a failed new high. It gets above it, it fails, and then it drops. It's one of my favorites. This one right here gets above it, fails, drops. That type of day would bring you back down and could open up some downside up ahead if it plays out in that way. But again, in this market, we haven't seen a whole lot of that because it's been a very bullish dominant market. So this midpoint is going to be very important here. That compression right there, if this is kind of a fake out to the downside and then we see a pop to the upside, this could be the next short-term run. So I'm not saying it can't go up. This could be I'm just saying if you're going to be long here, just keep it short term. Keep it short term, keep it swing. It's hard to establish positions at these prices, especially in the broader market here, when there's so much potential downside and value is pointing so much lower. It's just, this has to be short-term oriented if you are going to take the long, which it could certainly bounce here. So got to keep an eye here on these recent pivot highs, pivot lows, which is about the 25.4 zone. 25.4 is going to be very important short-term there. I want to move on here to the YM. YM right now, with the recent price action, has seen a little bit more weakness here, breaking down a little bit today, getting above the previous session's high and then pulling back. Not quite a failure or rejection, but it is a failed new high in a down move. It's hugging 47K very, very tightly. So 47K is the major market structure level here. For those of you following along that are not used to our trading room analysis, the trading room here, we constantly look at market structure levels that are clearly evident in the stock price and the chart. Like, they just jump out at you, the major turning points, and then oftentimes they are equidistant. They're equidistant market structure levels. So in this case, 37,000, that's where we pivoted low. 39, 41, 43, 45, 47, 49. We've been on this up move ever since. This test at 45,000 was 45,000 even. The test yesterday went to about 9,250, just below that 47. That's impressive. Do we get to 49 right away off this bounce? Remember a few weeks back, for those of you in our trading room, because we finished this week above that week's midpoint, we said the next week is a checkmark week, and then we likely see 2 to 6 weeks of strength. We had that great move. We had a move to a new high this week here, a little bit of a pullback. What if next week we get that continuation again? You know, after a little bit of a pullback here, we get that follow through. 49,000 could be ahead. So I would say if you're looking short term right now, keep an eye on 47,000. Here's 47,000 right here. It's been a very important level, 47,000. There, and then here, recovered it here, bounced it here. So if you fail here, the next level down is 45. That's the perfect 45 test. It recovered it here and went straight up. Anytime you have major market structure levels, especially when they're wide, the midline is always important as well. So if you fail here at 47, technically 46 is a really good spot. Don't necessarily have to get 45, but you often do if you get to the midpoint within the range. Okay. I want to also show how impressive these levels have been on these 2,000 point increments. I mean, look at this. Just really, really good action time and time again. The way it recovers these levels, hits these levels, breaks out from these levels. So that's why that 47 is so important. So if you see a major failure through here over the next several days, you know 46 and even 45 could be very, very real. And then you have value way down here. So if we're up here in R3 territory and we're failing right now, for example, if we wanted to show a signal there, double click here, there's their signals, boom, right there. It's showing some sell side signals here at R3 time and time again. This is not one that's finding acceptance above R3 very often. And when that's the case, you tend to see a move back toward, you know, the second standard, then the first standard, and then back down here. First standard will be coming in line over here. I don't always show those lately, but that's the deal right there. So this is going to get interesting here for this one. How far back do we pull back? Do we fail at 47K? If we hold 47K, 49 is next. But I almost feel like this thing's setting up for a little bit broader of a pullback. Is 45 in the cards? 45 could open up 49 longer term. Again, not likely to see that anytime soon, but you never know. You never know with this market right now and how fast it can move when the headline risk is there especially. Okay, looking at RTY, this one's quite a bit different than the others. This one worries me a little bit. And if you're looking at the Russell 2000 as a leading indicator, as it oftentimes can be, small cap Russell 2000, if you're looking at this as a leading indicator, then we are at some very, very important levels in the chart. And we have a lot of energy built up that if we don't follow through to the upside, it could unwind big time to the downside. This is what it looks like right here. By the way, let me align the ADR with just a 1 day here. This is what it looks like right here if you look at this wider view right here. This is the wider view of RTY. And what you'll notice again is a very good trading range. Something like this. Something like, this. And we've seen movement up and down and up and down and up. And here we are now. Right here was one time when we said, hey, this has been a perfect trading range, and we're currently in a small box above that range. If we fail at that top end, we're going to go to that low. That's going to be bad. And if we go to that low and fail, we have a range measurement that'll get us down here. It's going to be bad. This could be it. And it did, and it turned out to be that. Fast forward right here. We called the same thing last year when we said, look, it's right back where it was. Are we going to see at least a move back down a little bit to 21? At least. And maybe stay in here a little while. Of course, we saw much more weakness than that in the broader market at large, and we got to move almost all the way to the lows. Wow. And we have since rebounded all the way back up. So right now we are at the tippy top of that zone again. And that zone is about 2460 to 2480. And right now we're 2475, which is right smack in the middle of that zone. We are right there at the moment. Is this an overvalued situation yet again for small caps? Is this overvalued? And if you look at over here, R3 plus prior resistance. Right now, R3 plus prior resistance. You can make a case for it. You can make a case for being overvalued. Wrong spot, wrong time. Remember, in April, I know we didn't do a market outlook at that point, but for those of you in our trading room know, in April, we certainly had this as a buy. All of these. This was in line with what you like to see into S3 after a deep discount. Buy that and make a move up. Trim your positions along the way and then reload for the next time. Right now, are we about to get the opportunity to reload on the next pullback? It's just too expensive up here at the moment unless you're short term. So that's the theme of today. That's the theme of today. Additionally, you're starting to see a lot more headlines coming out and headline risk regarding massive short positions, for example, like Michael Berry and his short positions in Palantir and NVIDIA. You're seeing Warren Buffett going to major cash after selling a ton. And those articles starting to permeate. You're starting to see overvaluation here and there, bubble talk in AI. And they're not wrong. They're not wrong, y'all. These have been overvalued for a while, and we've known it. But my point has always been is they can remain overvalued a lot longer than you think before you ultimately get that move. So you don't want to get into hedges too early. You don't want to short too early. You don't want to get out of your own running positions too early, because it could still be a whiles away. But man, look at this energy right here. This is a ton of energy right here at R3 at major long-term resistance. Whichever way we come out of this range, it's going to be fire for the next 2 months. For example, right here, look at that range, rounded top. What did we say at that moment? I said, this looks bad, y'all. Higher high, head and shoulder, right edge. This does not look good. Boom, we got the first move. This has similar energy. I don't want to say it has similar bearish energy. It has similar energy in terms of the amount of fuel and juice in there. If this move was 23 to 2,000, 300 points, this could be the similar move as well. That's a 300-point move right there. It's similar energy. This is going to be interesting with this one. This is a waving a caution flag. And I'm not perma-bear and things like that. It's just, you know, when you see it, it just it's something you have to be a little bit more mindful of so you don't begin or start new positions at areas of the chart that are just too expensive. That's not to say that you can't buy breakouts and things like that. It's just this is a mature overvaluation at the moment. Very heavy. Yes, we still may see strength, and we have some upside targets that still could be in play here for the Russell from this recent impulse move. You have a target that can get you right here. Oh, not that high. 27.38. That's a big target. That's a big target from the edge. That's a big move. So we could still see some short-term strength, but at the same time, man, this is getting a little overextended at these highs, especially against historical resistance. We'll see what the market thinks here pretty soon. I want to move over here to gold. Here's a look at gold. Tremendous strength out of this one as well. Just to catch you up with our trading room analysis here, we had this move right here as a 500-point key range. 500 points in gold is massive. So the idea is when that key range developed, we said it'll be in here for a while. It'll be in here for a while, but then eventually we'll get a 500-point breakout move. Well, this thing overstayed its welcome for at least another 2 months beyond where it could have. And then right here was the breakout day on 3,500. Right there, we told our trading room 4,000 is the next target. 3,500 plus 4,000 or plus 500 is 4,000. But because we got there so fast, 5 weeks later, I said this is way more energy than just 5 weeks. And we upped the ante there to 4,250. 4,250 because it's midway up to the next level of 5,000. And we got in there and then it got squirrely. Gave us 2 day 1 rejections. And since then we've been down. Great short-term breakout and runs to the upside, but now we're doing the same thing but in the opposite end. You know, compression down, compression down. This compression right here has about 300 points of range, easy, in there. And from 4,000 to break down, you're looking at easily 3,700. That takes you right back to the the September FOMC key level of 3,722. Are we headed for 3,700 and 3,722? And if we hit that target, do we get a little bit more into 3,500? Remember, 4,000 is a market structure edge. And you have 500 this way, 500 that way. And right now we have that great compression that is exactly above and below that level, exactly above and below the FOMC key level from October 29th. There's a lot of energy there. If you want to see the energy right now, 1, 2, 3, 4, 5, 6, 7 days. We'll make this indicator right here 7 days. Right there. And you see right here just tremendous compression overall. That 7-day range, super compressed against the market. It's only 44% of average, being 333 points. We're at 150%. The wide figure up here is over 400. Now that's a lot. Keep in mind, we just had the biggest volatility ever over here. So it's hard to use those as clear-cut target measurements. So that's why I'm saying 250 to 300 points. Easy. On a breakout move from here. On a breakout move from there. So if we just do an edge play at 3,900 and break 300 points, then maybe as low as 3,600. You know? Maybe it's 3,650 to 3,700, somewhere in there. But that could be easily what we see ahead. So for tomorrow, if you're just looking to play gold tomorrow, watch 2-day highs and watch prices above 4,000. We're currently trending down below the 8-period average. If price pops above today's high, back above the Tuesday high, and then we start to see some failure, we start to see a thrust reversal sell signal, for example, that could lead to a rotation back to today's midpoint and back against the range here into the bottom of the 2-day range. Basically, we're in a trading range right now. Obviously, right here. So if you go down a day, you tend to go up a day, then down a day, then up a day, then down a day, then up a day. I know it sounds silly, but it happens. Tomorrow could be the down a day within the trading range. And if it's a down a day, it will likely start by bringing in late bulls above recent highs, trapping them, and then using their sell stops to fuel a push back down. That's the idea. Question here, is it currently in a fair value gap that can hold price and reverse at around 3,900? Good question on that one. Bringing it back out a little bit. 3,900 fair value gap, perhaps. I'm not sure on the fair value gap part. Perhaps. It could turn. Okay, the way it turns around off this zone to head higher is kind of how it's playing out today, but tomorrow does not turn into a down a day. It needs to really overtake 4,000 and then recover this high, like a stop run through the high. That would leave this low intact and a failed attempt to get a new low, and then that would lead to some sort of aggressive squeeze opportunity that develops there. But the reason I'm favoring the downside right now is because it has lacked the ability to find a strong low. I thought that this was a decent enough low that could have gotten us a midpoint, but it couldn't, and that's a huge red flag. This was not good enough. That was not good enough. And when it lacks a strong low, it's hard to really pivot higher off of anything. So it has to continue to auction lower until it finds that strong low in most cases. Now we can use a big trap like this to create a strong low, but oftentimes it's hard to guess that. You have to see it play out. So right now favoring the short-term downside, but I do recognize that this narrow range it has the ability to break in either direction. It has the ability to break in either direction right now, and that's something again that you know, is very, very important there. When, oh look, yeah, I see what you're talking about right there on the thumbnail. Oh, as it's popping up right now, I'll let it pop up. But basically, where are we at right here? Oh, did I pop it up a couple times? There it is. Yes, good job, good spot right there. Absolutely. Yeah, thank you for that. Okay. So looking at this right now, compression, big time compression. These highs up here are super strong highs. Super strong highs right here. That if you know the way the size, the participation on those strong highs, the massive ranges that we saw there, it was just out of the norm, statistically significant, and that can tend to mark a strong high. So even if we rally this could be a failure on a higher high failure back down. It's just a very, very strong high. And at the very least, we could be looking at a trading range developing between these two extremes, 3,900 to 4,400. Yeah. Yeah, you're exactly right regarding the Pima trigger zone, Lewis. Right here inside the bullish Pima trigger zone. I think one time when you have to be very careful about the bullish Pima trigger zone in that, here, let me restart this real quickly here. In that, when you've had too much separation from that pivot high to where the bullish Pima trigger zone is, you've now stretched the data set too much, and you don't get the similar bounce out of it that you normally would. And I think that's why I'm not really liking the bullish Pima trigger zone as much in here. Like in here, it's at a steady, constant pace, and then it got too stretched away from it and became a reversion to the mean. And then right here, you're not bouncing out. Right here, you're not. So you have to be a bit more careful when you're using it that way after a big time reversal. So that's one thing to keep in mind there. But after it builds out in here for a while, it could certainly break out and then continue. And you're right, that bullish Pima trigger zone keeps things intact in that way. It's just the first test, second test, all of that is just not lined up like normal. All right, let's bring this back over here. Let's see if I can get my tool back going. There we go. Excellent. So what I mean by that is, you know, usually in the bullish Pima trigger zone, very nice, very nice, very nice. And then you get that big stretch, and the distance is too far. So when it comes back, you don't get the normal bounce and continuation anymore. This pullback is kind of stopping the move for now. And even though we still are in a bullish Pima trigger zone here and building energy, that can lead to a continuation. But again, this previous or preceding volatility could lead to failure as well. So it's a tough zone. Not as easy as it was before, and certainly a lot of volatility. A lot of volatility, as you can see down here on the advanced ADR indicator. This is the Pro version, so if you haven't seen this before, then you got to get on PivotBoss Masters here. That's where we're releasing these new Pro tools are for TradingView and Thinkorswim. This one to be released to our Masters members here very shortly, but we do have other signals that have been released as well, including the thrust reversal signal. That one's been tremendous. We did our PivotBoss Masters training on that here recently and got tremendous feedback for the thrust reversal signal, and have improved it already since then, and have provided that download for our members here in the this week. So a lot of new stuff here coming out down the way. Some great potential here with these tools, and also with the market that we're coming into. So converging markets here of great high volatility potential with also great precision tools to highlight those opportunities. Let's take a look here at crude oil. Crude oil very bearish right now. Very bearish. This one is currently in a highly bearish seasonal pattern as well. Oh, Lamb, let me know. Send me kind of a direct message here of your email address as a Masters member here, and I will check to see if you have some sort of a server hiccup there, because the membership portal is up and running nicely here, and sometimes if there's too many IP logins or something of this magnitude in a short period of time, it can shut off access. So let me know what that is, and I'll get you squared away. All right, here's a look at crude oil. Bearish seasonal cycle. Let's look at the seasonality here. We can bring up seasonals right here in TradingView. I like this table view. You can pop up the average. And this is a view with 2020 in it. 2020 was a unique year. Let's drop 2020 and make it just from 2021 this way. We're in November. This is your seasonal pattern for November. Very bearish. This is the current right now. We're only 5 days into the month here, only 3 trading days into the month, and it's already bearish in line and can only pick up pace to the downside. Very bearish seasonal cycle, and it tends to drop into about the first week or two of December. And then you see a little bit of a bounce in December that can play out into the beginning of the next year, as you see here. Bearish seasonal cycle, the most bearish month by far, 8.5% over the last 4 years. That's your seasonals there. We can also do seasonal metrics in Thinkorswim as well, which I've shown before, but I wanted to highlight this one. Very simple chart-based or table-based approach. Now, if we look back over here, look at that compression similar to gold. Multi-day compression. Today, outside day down. Strong high, strong low. Have not gotten quite to the midpoint yet. We need that 59.28 to get to the midpoint and give us a new key range. But this energy right here is pointing to about 6 points of range easy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day compression. That's a 2-week narrow range. Let's bring that up. Now keep in mind, that's 1 day right there. That's 1 day, and that's your 1-day range right here. And for the last 9 days, we went just above it and then just below it. So a 1-day range is almost equal to the entire 10-day range. That shows you how much compression we've had lately. That's just a really compressed range, and it appears as though we're about to take this FOMC key level offered. We are about to break out of this compression to the downside. I say about to because today, while it closed on the lows, it didn't quite seal the deal. It was an outside reversal here as well, so that's pretty good. But at the same time, you know, not the most qualified signal. It looks like it's slow playing it right now. But at the same time here, that compression, average range would be 6 points of movement. We're currently at 3 points. 3 points of range within the last 10 days. So the next 10 days could see expansion of double that, up to 6 points. Up to 6 points. If the break is 59, then we're looking at 53, if you want to go that way. I tend to look at the breakout bar. If this is a 10-day range and we're calling that the day one breakout, then I may use the high of that bar and then project downward the 6 points. If we do that method, the high then is 61 points minus 6 and you get 55. I could see 55 being in play. This is what it looks like on the chart right now. And, you know, again, when you look at it from this perspective here, you can clearly see the downtrending channel that's been in play. We saw the seasonal pattern down 8.5% on average in November over the last several years. 10-day compression that has at least 6 points of range. And we're starting to see the initial breakdown. If you like this idea and want to get short for the next 1 to 2 weeks, keep an eye on 60. 60 may be important here. If price pulls back tomorrow in the morning, gets above 60 and starts to see rejection and failure, we may go inverted check mark down. And now that begins a breakout and a continuation. And now we're going somewhere between 54 and 55. By the way, 54 is the next major market structure level down. Your recent key range level low is 56. That's about right. That's about right. I will say right now, that's just short term, y'all. This is a 10-day range, so we're looking over the next 5 to 10 sessions down. If we don't break out right away, then we're back in the range up. Now it's day 11 and day 12 and day 13 until we do get a breakout. But right now, anticipating some weakness here. And 60 is going to be the level to watch. If we can't get above 60, that could open things up to the downside for a drop into the zone down below. And let me adjust this key range styling here. Right there. Just so we have the buy and sell zone. 54.31 would be a great buy zone against this key range. Now this key range isn't solidified just yet. We need to hit that level right here, 59.28. So if you like crude oil and you think it might be cheap as we come out of the kind of the bearish seasonal cycle here, which will start to occur in this time frame here, early mid-December. We drop 54s, S25, 54 could get you all the way back up to 60 and then up towards 66, maybe even beyond as we head into March and early April. So that would be the thought. That would be the thought here based off this key range. So this is going to be something to keep an eye on. Lastly, I'll say one last thing about crude oil here and we'll move on. Crude oil here sitting on or just above that 54 level. 54, very, very important long term. We haven't had a test at 54 in a long time. That's my lowest key level right there, 54 right there. If we drop down into 54s, in all likelihood we bounce it back up. And it's getting back to 60 or 64, 65 or higher. And maybe to begin the year, like I said, you have a little bit of overflow. Towards 70 maybe, or even 74. The major market structure levels are on the 4s, 54, 64, 74, 84, 94 for crude oil. Not anticipating a failure through 54s. So if we get that low, it could be a tremendous opportunity back up. All right, let's move on. Let's move on to Bitcoin. Let's move on to Bitcoin and crypto. We talk about the big market structure levels here for some of these markets, like 400 points for the ES, for example, 500 points for gold, 2,000 points for the YM. Yes, you guessed it. Bitcoin is 25,000 point increments, 25,000 point increments. Look at how beautiful those tests and transitions are off the 25,000s. Look how beautiful. It just doesn't get much better than that. Here's the 100. 100 was a little messy here, but then regained form, especially yesterday. 125 is right here. When we had our initial retest buy on 25K way back when, which was 2023, I mentioned 25 could ultimately double to 50. And then it could ultimately triple to 75, because 75 is the top end of the prior range. When we came back to 50, we said 50 here could be the next double. It'll be 50 and then double. Boom. And then to begin the year, or to end last year, we said 75 to 80. If it hits 75 to 80, you get 50% return as high as 120 to 125. There it is. And it's been on using the 25 level as a stair step the entire way. We hit it yesterday and bounced off of it today. 100K. Is this the next 50, 25, and 50% return? Now, back in July, when we hit 25K the first time, in July we made that idea. It just so happens that here we are on our first monthly outlook or market outlook in a while, and that early scenario is coming into play right now. So back in June, July here, when we hit these levels, I did say, if you can get an entry between 95K and 100K, you have a shot to return 50% over the next 1 to 2 quarters. Now, I will say I felt better about that one. I felt better about that one, and I felt better about this one than I do about this one right now. And so this one, while it could return that right away, there are different market dynamics right now at play. For example, to begin the year when we sold off here, it was a broader market sell-off as well. Nvidia sold off, and Microsoft, and everybody sold off. So it was a great broader market correction after the recent wave. This one has corrected now 25 plus percent, but that's not necessarily the case for the ES and the NQ. They're still quite overvalued. Do they correct more, or are we still melting up? It's just a different set of circumstances here, but nonetheless, the level still maintains. 100K is a tremendous level. And if you like the 100K to 25K and 150K idea, you could use the add back approach if we got lower. So if you have a stack right now and you say I want to be in, 100K is a great spot to be in, but maybe you go in half of your stack, and if we do pull back, you can add to that and improve your positioning. So that's one way to go about it. Again, I was much more confident back here on some of these other recent tests. And yesterday we said, hey, we got to watch 100 and see how it responds. And man, did it respond the last day or two, yesterday and today. Impressive. At the very least, does that breed a 25% return to 125K as we stay within this market structure? Or do we give it up? Does it give up 100K and open up 75? If it gets to 75, this is your double from 75 to 150. Because 150 is next, and it's right there. That's the level right there. 150 by way of market structure of 25,000 increments, like we've said. So here to here and then there. And then if you look at the recent key range right here that's developed, 150, 735 is the target. So even if you want a short-term opportunity, this can be a 50% return over the next 1 to 2 quarters or a quarter and a half. That could be tremendous movement here. We failed through 95 and 75 could be next. And now you're trying to get this move back in play. So that's the market structure as I see it right now for Bitcoin. There's a lot pointing to 150K. We've already had a correction from 127 to about 99. That's a good pullback. We're in the high probability buy zone, the best buy zone for a key range right now, and we're responding. It's not bad. You look at the daily time frame here and you look at the participation here. That's what you want to see. That is what you want to see. Having said all that, if we fail at 100K, things get really bad here. And we don't tend to just hit one time and leave and never come back. A lot of times what happens is you bounce and then you come back and test that low. Lower low failure, and now you go. This will give it some time here to build out a little bit. See what happens. Get that thing going. For example, look at this. Here's a low. There's your actual level. Got a little bounce. Boom. Lower low and go. Happens all the time. Look at this right here. That low. There's a lower low. And let's go. Here's a low. Made it bounce. Maybe we get the lower low later and it can go. So it can still prove itself. But man, if it fails here, things could get quite bearish. Especially with how heavy it is up here. Kind of looks like a rounded top. And if you fail at 100K, that thing releases to the prior pivot low of 75. By the way, that's where you have great value for an entry. S3 by way of yearly VWAP. And right now we're at the yearly VWAP as at the moment. This is 3 standard deviations below. One last thing. That key range right here. Impulse high, impulse low, got the midpoint. The 100% upside target is 150. The 100% downside target is 80. They're equally likely to be hit. So this market we know can go way up. It can go way down. I currently have no position in this market at the moment as I have taken the last on this recent push up. So I've been looking for the opportunity, and this is the earliest entry here. The earliest zone for a pop. From a short-term, medium, and kind of longer-term perspective, the earliest. But there will be more opportunities. There'll be better qualified opportunities as we see how this thing plays out. But we've seen some tremendous opportunities already off these key levels, and we're seeing it again play out. By the way, we sniffed it out right here. Even though we had this 6-day mega rally into that high, we said, you know what? Watch 125K because we could fail there and it brings us right back down. And man, was that on point. 125K holding firm. So that's some long-term thoughts on Bitcoin. This is home run entry. This is a great entry for short, medium, and long-term opportunities. Here, here, and here. And we'll see how this thing continues to develop off of that. Now, looking at ETH. This is Ethereum. I know, again, for those of you in our trading room, this is old hat. If you're not in our trading room, just to catch you up, we had 1,400 as the buy this year. We started the year with 2,100 as the buy. Watching 2,100 for an entry. But as we got toward that zone, we said, no, this market hasn't capitulated just yet. The next level down to watch is 1400. And when we hit 1400, it hit it one time, finished above that level the rest of the day, and then just had a massive recovery. Now remember, at 1400, the reason we liked that level was there was a massive CLVN there. Massive CLVN. And it was also, well, that was the biggest part, CLVN, and I didn't think it was going to get to a 1,000 to wipe out everything. Market structure there. Now, from 1400, what I really liked was the recent support level that had broken was 2800. 2800 is about right there. That's the level that broke to open up 1400. That's a double to get back to it. So we called 1400 for 2800 as a double and said the potential is to triple to 4200 as well. Once it doubled here, that day, we said an entry at 2200 opens up 4200. That day it hit 2200 and never came back. We have nailed it all the way up. And I took my last position off above 4500 right in here. And so I am not holding a position in this one either at the moment. My last was here. We've now pulled back to value. We got into the zone now, which is my first buy zone area as well, which is between 3,000 and 3,200. This is also an area we talked about back in the summer. This was August. When that happened there, we said if this thing were to come back to 3,000 to about 3,200, that would be a first long-term entry opportunity. We could get lower than that, but that would be the first best. And we can see the response here has been pretty solid already. Still not super convinced just yet. Look at the weekly chart here. This is the weekly chart of ETH, a lot different than what we're seeing out of Bitcoin. 48, 4,900 resistance here. Major support at 1,000 here. You had your major movement back and forth all along. This is your upper area of the expanding range. This is the lower area. We made it all the way back to the middle. That's a huge reaction here. I like Ethereum long term. I like its volatility, its beta against some other markets. Again, to call a double and a triple and be very confident about that was impressive, and for it to follow through was impressive. You're seeing a lot more Ethereum treasuries pop up as well, including BMNR. You'll probably see more of that as it plays out, and you'll see more adoption, etc., etc. Smart contracts likely to be a big deal moving forward, and once they take hold fast. So really, really like it. But in the meantime, things can swing. Things can swing wildly in these markets. And I don't like the idea of being in too early in case the actual swing happens. And that's what we were really good about this year at the beginning of the year. We didn't flinch at 2,100. It didn't look right at that time. And instead we looked lower. And right now, I'm not saying this doesn't look right. It's just it needs to kind of earn itself a little bit here. I feel like it could still get to 1,000. And if it gets to 1,000, it's right back to 5. And maybe beyond at that point. So I love the long-term potential of this one. I've done quite well with this one, not only in levels, but in managing positions along the way. Need a new entry here for this one, so I'm watching as much as anyone else. And this is the first entry zone. But man, what if we get a little bit lower? What if we get 2,200 again? 2,570, there's some potential here. I like the idea of snapping this thing back up to say 4,400 and doing it from a 2,200 entry. You know, that would be a great little double there. And I know many of you know, but just to refresh here, when I talk about doubling into something, for example, if you took the 1,400 trade and took it perfectly to 2,800, that's a double. Say you bought 2 Ether here, and when you get to a double, you sell 1 Ether. And in doing so, you essentially take out your initial investment, and now that last remaining Ether is it's yours, market money that you've taken from the market. So now you're protected your original capital, and you have a free trade opportunity here. And now you can hold it for as long as you want, or trade in and out however you want, or add your free capital to it. So if we get to 2200 and you see 4400, sell half and you have yourself a free trade the rest of the time, which means the thing can go to 0 and you've lost $0. That's one way to go about it there. Many ways to go about it, as always, but that's one way when we talk about the free trade idea. Big time expanding range. This is a tough spot for me right now to be like, this is a great entry when we're in the middle of the range and there's still potential to go across the lower edge. So watching just as much as anyone right now, and watching the higher, the big time picture range as well. This key range is very important from a short-term perspective. And the 100% target here is way up here at 59, but at the same time, we couldn't even get 4,900 when we were knocking on the door. So I don't like the idea of trying to double beyond recent highs. I like the idea of doubling from prices we've auctioned already. So some thoughts on Ethereum here. XRP. I like XRP as one that could provide a double potential. You know, $2 to $4, for example, could be in play. I would say anything below $2 could be a good entry. We do have this great key range right here. And look at this key range. Here, here, and there. What if we get into the S25, 197, and then rally to the 100% target? That's 4.1. That's a double. 2 to 4. That's a double. You like that. It would also be the lowest low here on the futures print. If you look at XRP USD to get a longer term view of the price action, that's your longer term view right there. I really like a 1.6 level. Here's your 1.6 right there. Maybe into about 1.8. That's a really good little zone there, and you can see the cash actually flashed down to 177. What if we drop a little bit lower into that 1.6, 1.8 zone? That could be a great opportunity to return it to value, 2.6, and then maybe you return it to the top of value up here at 3.4. You know, that could be a tremendous opportunity here. So I would be patient on this one. I like the zone between 1.6 and 1.8. Cash got there on that recent spike down. Futures did not see that. But, you know, good key range right here. The key range identifies 410. Actually, this key range with the spike down identifies 4.4 with the spike down on the cash. And then the S25 would be a 144. That's an exact triple. If you want to be super patient and force XRP to get you off the sideline, that level to that level is a straight triple. It's something like along those lines. It's a great move. So I'm going to be patient on this one as well, and let's see how far it can go to the downside. And that range is going to be very important here as well. Okay, those are some of the major futures, the major crypto. I know we've done a lot. We're going to rapid fire some stocks now. We're going to get through a bunch of them, get the key range, get all the stuff we need to get to. Since we're talking crypto here, let's start with some of the crypto stocks. I want to highlight a few of them. One of the ones I want to highlight is BMNR, the Tom Lee backed company. want to, I guess they've already begun a Ethereum treasury, and they want to pin their price to Ethereum. They're looking at Ethereum being Tom Lee, like I've mentioned in our trading room, just throws out targets like crazy. He's talked about, Ethereum can be 7,500 by the end of the year, and it could be as much as 12,000 or 15,000 within X amount of years. He throws out all kinds of stuff, and they're betting big on it. I do like the idea of this one moving forward, but I want to ignore the early craziness here and just kind of bring it back to about this point right here and focus on this range. This is the key range we're focusing on here, which is a massive key range, and the lower key level is 30. If you can find an entry in this one at 30, the double is back to 60, obviously. The double is back to 60. But then you have the potential to march not only from 30 across the range to 71, but then that 100% target takes you beyond 100. 113 is your long-term target from that key range. 113. I'm not saying it's going to get there soon or ever, but it could. And the spot to be in, the best potential spot to be in, would be between 20 and 30. I know that's a big range, 20 and 30. You have S3 here, you have S4 here, you have a rising 200-day moving average here. If this thing drops into the 20 to 30 spot, let's just call it an even 25. Doubling, tripling, quadrupling as we go up the price ladder. Now, it's recently traded as high as 70. That's where we got the key high. We were recently above 60 multiple times here, including last month. We're dropping here. If you like the idea of having something like this longer term, but you want to make it force you off the sideline, that's going to be a great spot right there. Right in here, drop in there, get this thing going right back to the upside, and you have yourself a good return on investment there. Now, say your entry is 25 and you get to 50, that's value. Value is currently 51, 52 right here. So you're doubling just to get the value. That's one of my favorite opportunities. And then beyond it, to get up here, you're tripling here. Just to go from S3 to R3. That's the way you do it right there. BMNR, an opportunity there from a high potential beta return type of opportunity against the broader market at large. We'll see if we can get something like that going in BMNR. The next one I wanted to highlight is IREN. This one did a partnership here recently with Microsoft and got tremendous movement to the upside. This one continues to run. This is a Bitcoin miner, but is pivoting toward energy as well, and has done a deal with Microsoft for that energy, and you can see the tremendous growth lately. That pivot to AI, data center and all that stuff has really worked for some of these companies, including Cypher and IREN. You'll probably see more pivots along the way as well for some of these instead of being a pure miner. The story on this one can continue to grow before it gets weaker. It can continue to be silly before it stops. And so this is the key range to watch. If you like this one, even from a short-term swing trading perspective, from an options perspective, there's a lot of movement, a lot of volatility here, just a lot of great action that can be in play. This key range right here is the one to watch. Key range midpoint here from that recent high, low, mid. The 100% target takes you exactly 100. 100. But is this a time to be long for a move there? It's still about 33% return to get there from current levels. This is not my favorite spot to be long if you're trying to get to that target. But it could turn into that. It could turn into that. It's just not my favorite spot. This is a trap opportunity to me. That's a trap opportunity in here. Bear trap. my favorite entry is 25% below the key range low. That's my favorite entry. That's 41.72. We're currently at 76. That's way off, right? Not likely to get that anytime soon. But if you wake up one day and you saw that level, that might be a tremendous opportunity off that zone, depending on what it looks like ahead of that. So from the key range perspective, we have up to 100 up ahead for this one. It's hard to call if we're about to get there now on this breakout today. We certainly could, like I said, but you know, not my favorite entry to be in right there. Let's bring this back down to 1 just to qualify this bar a little better here. 146% of ADR. Really good participation here out of this one. And you can just see the tremendous growth we've seen and the volatility growth as well. So looking really, really good. Again, 100 as the upside target. That means 50. If this can just drop to 50, we can get there. Doesn't have to be greedy about 41.72. Just get to 50 and you have yourself a double. So we'll see what we can get out of this market right here, but this is a really good key range and could provide some great opportunities. Now keep in mind, if we are in a bubble here and everything's about to fall off, what if tomorrow we had a failed high and then boom, outside day down? You know, one of these days. Whoosh. Is that a higher high that now suggests we're about to fail? That's what's great about these key ranges. They give us a downside target as well. 22.25 would be the downside target. And that's right inside the value pocket here between the 200-day moving average and year-to-date VWAP. So if you really want to be patient and you don't believe the hype right now, but you think it'll mature into something hype worthy later on, this would really be the spot to be between 20 and 25, you know, on a reversion back to the mean. So some thoughts on IREN. It's hard when you've had this much growth to really say, yes, it's easily going to get to 100. We know that this is a very irrational, very aggressive price discovery phase market for some of these. It's not whether it's true or not. It's just the market we're in. The market is an aggressive auction market at the moment, and at some point it will transition out of it. But it is what it is until it isn't. And so we can still see that 100 print until we see a strong high develop. Okay, another one I wanted to point out here is HUT. HUT 8 has had recent tremendous strength. This is incredible here, the amount of strength that HUT 8 has seen here lately. We've seen this thing go from kind of nothing to something very quickly. Just in August, it hit 20 bucks and rallied to 57 by October. Massive, massive movement. This one was trading sub $10 during the pullback here. I guess it got to $10, maybe $9.99. It got right into that zone and had that rounded bottom. And about right here, we mentioned this has a good shot to double. This has a good shot to double and then maybe triple to the top of the range or a little higher. And then it goes on to maybe go 5x return, which is incredible. So a lot of movement in some of these to some significant levels. When you see it against its weekly charts, you know, you can certainly see here that we've had times where prices have gone way up only for them to come all the way back down. Here's $5, here's 65 bucks, that's 15 bucks. This move here from 15 went way up here to 80, then all the way back as low as 5. And now from 10 to 57, it too can come back to 15. So I don't like the idea of some of these just easily saying, yes, we're going to get to that 100% target. Sometimes those key ranges are designed to show you where they're about to go back to, 15. And 15 looks like a good target that gets hit time and time again. Some of these could get crushed. So one of the things we've talked about in our trading room is trimming your position along the way. If you're in something like this, trim along the way, and continue to, again, mind your risk, because major pullbacks could come, and once they come, they start pretty fast and hit hard. So this is a great key range. Yes, it could get up here to the 78 level, but I wouldn't be trying to get to 78 from a new high, kind of like IREN right now, at the moment. Instead, maybe down here around 30. If this thing gets to 30 to 78 might be a great play, or 30 to 60 to double that way. So we'll see how far we get back. I love the idea of testing those strong lows that we developed here in late October. Another one here to look at in the crypto space is WGMI. This is the Bitcoin mining ETF. Look at the Bitcoin mining ETF since our buy signal, or our buy call in April. By the way, all of these had rounded bottoms in April. We had the strong lows in April. We had S3 support in April. And that's when we looked at the entire group and said this entire group has a shot to rally back toward those prior pivot highs at the very least. And in some cases, those were doubles. In some cases, those were triples. And then this happened. It broke through those highs and made a fool of me here. A fool, I say, because I only projected to the highs initially. It's hard to foresee that price action until you get into that mode. And then it still took me by surprise in September that they got driven so hard up. And that is kind of a warning sign to me in and of itself, the way it got driven so far up to the upside, almost like this had heavy short interest that got attacked. So this range right here doesn't necessarily have to get us to the upside. It could certainly bring us back down. And again, if the 100% downside targets are in play, it's going to bring us back to fair value areas and breakout points. So this is going to be very interesting. But I like the Bitcoin mining ETF because it's had tremendous movement and volatility. It's got a great key range now. And even if you're just wanting to participate in the miners without having to pick one, this one's providing enough volatility to really make it worth your while. Just to trade, say, from this edge to that edge is a 20-plus point spread, or vice versa. That's all you need sometimes. You don't need the full-on expansion. You can just trade the edges of what we have, or trade an edge back to a middle, trade an edge back to the middle, and that could be a great way to go. The other thing with this one, last thing, if you're seeing really great movement, say, out of Bitcoin and Ethereum and the crypto futures, then or you're anticipating a big day out of those or a bad day out of those, that could be a way you could use this as a proxy for high beta movement as well, because some of these stocks really move big. And I believe IREN is heavily represented in WGMI, if I'm not mistaken. So you like to see what the constituents are of the ETF that you're trading. But this has built up a tremendous amount of energy. I really like that key range for future action. All right, let's move on to the nuclear group. Nuclear group, man, one of our faves to begin the year. We talked about nuclear in our monthly outlook, or our market outlook to begin the year. One of the faves was SMR, OCLO, those. And this is to end the year right there. Right there, to end the year. Price was trading about 20. And at the end of the year, and also right here at the beginning of the year, during our monthly outlook, we said $12 is the entry for SMR. That's $12 right there. Price drops. Price hits $12 during the market-wide sell-off and the day one rejection that we talked about. And in our trading room for 2 days, we said, hey, it's at 12 bucks. Because there's an opportunity to double it back to 24. and a chance to triple it to 36, just beyond recent highs, especially if we're forming an expanding range. We were right on 12, 24, 36. And again, look at the movement beyond even my farthest target, which I felt pretty good about. You know, if we're saying, hey, we think this thing can bounce off 12 and go double, and not only double but triple, that's good enough. But it did that, and it went on to, again, triple, quadruple, and quintuple. Just incredible movement out of this nuclear group. Tremendous growth. A lot of Mag 7 companies contributing to this, and a lot of other companies all coming online. Energy is big right now. Data centers, AI, all that stuff. Quantum and the usage and energy there. Crypto and Bitcoin mining and the energy and usage there. So it's all coming together for some of these companies. It's incredible. The volatility, the movement, the growth, and we've been on top of it. And credit, our traders in our trading room as well for bringing these opportunities to our attention. And we built these groups together. And we've seen tremendous movement. Now, onto the current move. What's the current move? Because look at this thing now. This is our newest key range. And it's massive in size. 33 to 57. That means we have an upside target. That takes you to 82. That's 82 right here. That means if you can get in right now and hold over time, and you likely double it to get to that target. Now, I'm not saying there's not a better entry. There's likely a better entry coming. But where's the better entry? We got to see how it plays out. Is it going to be S3? Are we going to wipe out back below 20? Here's the breakout point initially. Are we about to do that? I could see that happening. I could see this happening where we drop as deep as 20, maybe get in here into the S3 zone, and then from here make a valiant return back up. I could see that being the case. Nothing will surprise me in these emerging markets, because at the end of the day, while they've grown tremendously, while we've seen the growth and we've been on top of it for nearly 2 years now. SMR we added to our group here back in March of 2024. We had the retest buy at 12 and 25 here. We've had it on 2 massive rotations. The next one may happen off of 20. What if we come down here and mess around near 20, and then all of a sudden we go hit 80? That's the next wave as this thing sees an expanding envelope of volatility. So I think this has a great opportunity to see a little bit more discount. And if it does, like I said, these opportunities I'm talking about now, you don't have to force the entry. Let it come to you. Let the market come to you. And if it doesn't get that low, then fine. We'll find another opportunity here. We'll find where the proper entry is. But some of these here we're talking about, these would present tremendous opportunities. Because, again, like I said, in some of these markets, they're emerging markets and emerging industry groups. They're not making a ton of money right now to justify some of these valuations. But it's all set up to do so over time. Nuclear is the next wave. We're already looking at what the next wave past nuclear is going to be. I think it's fusion companies that are going to be the next wave beyond that. But right now, billions already being put into the nuclear space. These are huge. So this is a great key range. It points to 80. Can we be patient for a 20 spot here? Can we be patient for a 20 spot? And that's kind of what we were before when it was at 20. Can we be patient for 12? And it took 3 months. It took 3 months of being patient, and then you hit 12. Same thing here. Can we be patient and see how low do we go before the next rotation? I really like this one, though, a ton. SMR. Oklo is another one. And Dwayne here says IREN and SMR both with earnings after the bell tomorrow. Those are going to be important to keep an eye on. We have earnings for a lot of these. The big one coming up here is going to be in NVIDIA next week. Is it next week? NVIDIA coming up soon. The other 6 of the other Mag 7s are all reported and did quite well. This one is incredible. This one's Oklo. 1750 entry point zone here. That's been kind of the standing support zone. 1750 for a rotation back up. We even talked late that if you go 20, you can double and triple to 60. And that's all I said. Rounded bottom at S3, double and triple to 60, and then it goes to 193. So again, incredible volatility out of these. I did not think we had that much juice to get way up there, but here we are. Now the volatility is significant. Major day one high here. We're seeing a tremendous head and shoulder pattern develop here. Massive size head and shoulder pattern. That's also the key range. This has the potential to drop all the way back toward 34. In all likelihood, at the very least, you drop back below 100 as this thing continues to work its way down. A reversion to the mean from that high, when there's too much of a spread here, there tends to be a reversion to the mean, and you don't stop till you hit VWAP or the 200-day moving average. And in this case, they're both around 65. You're going to have to wait to be back in on this one as well. This one is overdone in a big way. Again, I've been a nuclear proponent here ever since we collectively built those groups in our trading room over the last nearly 2 years. Very, very bullish in here. But September and again in October, I feel like overinflated things well beyond. Where I thought 17 and 20 was a good value, now you're looking at 120. And like I said, these are still new companies. They're not pounding the earnings here. You got earnings coming up. Is it going to be good or bad? I mean, it's not going to really likely support current valuation. So, and whether that leads to a gap up or down, who knows? But again, if we did pull back, if we did see a significant discount, it could be a tremendous opportunity for the long-term potential here. They clearly love Oklo. They drove it nearly to 200 when our initial buy was 17 bucks earlier this year. Wow. I can't believe it got that far that fast. So significant. We can see what some of the winners and losers are out of this deal. A lot of winners, but overinflated right now out of this one. And I'll just go quickly down the list here. NNE is another one that grew tremendously here. It also has a key range. It doesn't have quite, I mean, yes, it's rallied from 20 to 60, so I don't want to discount a triple here. It hasn't quite been the same magnitude as some of the others. It's had a little bit back and forth. It's been a bit more volatile. Really great for short-term volatility and movement. You can see the spread here, 36 to 60. That's a lot of good movement here. I like some of the others better. Centris is a super high performer. I poo-pooed this one earlier when I said this one looks great here. This one may get to the highs, but I like some of the other percentage returns better on these other ones. And then this one goes and smashes things and goes to 460 from the original lows here of around 50. How did that happen? Well, the reason I like this one to begin with is because it's not just a nuclear pure play, but it's also kind of a consultant to it, and it does all the things here to kind of put its hands in kind of everyone's pots a little bit, if you will. So it's got a lot of different revenue streams that way, and it's built up tremendously. I love this key range, but man, 634. Ooh, that's a long way out there. When we've grown this far and we have that magnitude key range that forecasts that super far off target, when I was looking at this thing at 50, I wouldn't shoot for that target. As a matter of fact, I wouldn't shoot for anything above that high. The best case scenario might be discount, say, to 200 and then bounce it back to 400. You know, something like that. Discount it to 150 to 200 and try to get it up to the 300 to 400 zone. So that's my deal on this one, is these have to discount a bit more, but we clearly have some great key ranges to work with. Lightbridge is another one here. In the nuclear group's done really, really well. Great key range. Kind of similar like the others. I want to give it a little bit of a rest here. But one thing I will add as we move on from nuclear, you don't have to pick it. You don't have to pick SMR, Oklo, Entity, and I know it's not an exhaustive list. You can go NLR, and that's the uranium and nuclear ETF. More diversified, gives you access to nuclear, but smooths out the volatility. Case in point. Case in point, on this pullback right here, that's an 18% pullback. If you take these 5 stocks and you create a 5-stock composite, meaning you average, you add them up and divide by 5, that similar pullback is 38% correction for these 5 average. This pullback was 18% correction. You're getting a much more softened blow here on the pullback phase if you like some, exposure to the group. NLR is a great way to go. I happened to find NLR back last fall when prices were about 70. No, I guess it was in here. It was about 70, I thought. 70 something. And man, has it really performed since then, especially after the early wipeout back into 70. You don't usually see that type of return on an ETF. That's a tremendous exposure. So if you want to engage the nuclear uranium markets here, this is a great way to do it. Great key range here, and some good volatility to work with. All right, let's move on here. I want to talk Palantir and then some of the AI stocks. We won't look at the exhaustive list of AI. This is by no means an exhaustive list, just several players, other players much higher. Palantir here, big news here with a $900 million short position out of Michael Berry in this company, on a tremendous earnings the previous session as well. So on big earnings, it gaps down, big news, headline risk, and obviously look at the move in this stock over time. It's been bananas. I did not see the vision of this stock before. I know we had it as a buy opportunity early. And then in 2024, I said, man, this is my #1 buy opportunity, but I can't find a good entry. Can't find a good entry. I don't know what I like here. And then it bounces off 20, and I said, oh, that looked good. And before you know it, it's doubled. It's tripled. It's quadrupled. By the beginning of the next year, it rallied to 125. This thing had just went bananas. And it's continued to do so. The large spread on this one is 60-point spread right now. 65 to 125 to 185. And the next one beyond that, right here, is 245. So we're at 185 right now. This is 125. This is 245. That's 65. Those are the major market structure levels for Palantir. I'm not saying we pull back to 125, but if we did, it's a double to the long-term upper structure. I have mentioned in our trading room that of any stock, this one probably blends all the unicorn words together to create a super stock, which is tech or software, it's AI, and it's defense. With a big time wired CEO that's aggressive about his brand here, and that's been big for the stock price. Again, I have trouble buying at these multiples here on an R3 that's going up. I'm still a fan here of potentially pulling back maybe as deep as 125. When we got this initial pullback here, I said, man, 125 makes a lot of sense. It really does. It really does for a bounce, and it never quite got there. So Do we get a continuation to the upside off these levels up ahead? Do we get that bounce back up? I need to kind of see a bit of a discount. At some point, Michael Berry may be right. But this market almost seems kind of like Tesla had been, very, very against the shorts. We're short hostile, which means anytime it does pull back, they aggressively drive it again to kind of squeeze those shorts. So keeping an eye on this one, but I wanted to at least reveal the market structure, reveal the key range here. The key range points as high as 237. The next level up is 245. So you can start doing some reverse engineering here on this part of the chart being a good spot for longer term entry for Palantir. So we'll continue to watch Palantir there. We do also have some early AI stocks we talked about earlier this year. Tempest was one of them. And we mentioned with Tempest that 30 was going to be our double and potential triple. And I sat there at the altar waiting and did not get in. Because it didn't hit 30 perfectly. It got to about 31 or whatever that was, and then rallied to 60, and then hit our 90. At the beginning of the year, we said 30 to 60 and 60 to 90 would be a double and a triple in Tempest. And again, I got left waiting there. And at the time, I did say, hey, you know what? You don't have to be perfect here. Just being in is good, and I didn't get in there. So I kind of whiffed on that one, but the analysis was right on for this one. Love that that played out nicely there. At the moment, we're way overextended again. 90 has been an area where it just can't find acceptance beyond. We do have this new key range right here, which could put us all the way back down against the range. And 40 to 45 looks like maybe a landing point. I mean, you can see and make a point that we are needing some corrective territory for some of these stocks. You can really see that point being made. Another one we talked about was NBIS. I talked about NBIS earlier this year as a new, kind of newish AI stock, and mentioned, you know, right out of the gate, wow, this one has some potential here. I mean, what if we just see this thing rotate? Here's 2025 right here. What if we get a little bit of a pullback into these lows here? We could be looking at a pretty good move across the range. You know, a bounce off 20 gets you to 40 and gets you to 60. We've seen some of that happen. And here's a 20 bounce. Here's a 60 move. And of course, this thing continues to 140. So just the earlier candidates that we had in some of these groups have played out so tremendously. Now they've given us huge key ranges to work with in the current time frame. And this is going to be big for us down the road. And again, 100% is way down here at 48. You have rising value pocket here around 60, and we're still at 117. Are we overextended for now? Perhaps we are overextended. But this larger range could keep prices in check for a while, maybe a distribution. And then a markdown may follow. We will see, but these are great key ranges to continue to watch right here. The last one I'll mention here in the AI space is ARM. And this one is more, again, I guess I'm being a little bit more bearish here than I expected I would be. But when you look right here, that's 180. And we haven't had a lot of success beyond 180 in this stock. If you look at the other end, it's 80. And if you look at the midline, it's 130. It's a 100-point range. 50 points down, 50 points down, and we found resistance each and every time. Are we headed back to 130 here in this market? Are we headed to 130, back to the middle of the range? So when you look at the AI space and you talk about bubbles, and you talk about, you know, some of these markets here that are being shorted or maybe overdone, you can make the case for it here with some of the ones we're looking at. Oh, yeah, a couple of more here. SoundHound AI. We had this one as a buy candidate last year. One of our members really gave us the early scoop on this one, and he wrote it up from 5 way up. as well. So really, really good movement out of this one to finish the year. This year, this one got hit pretty good by the NVIDIA CEO who divested from them, and you saw the tank. I do like SoundHound. I like this one to recover more than Serve back in the day, faster. And so far it has recovered decently and got to the top end of value. That's 22 up here, and that's R3. So those right there, that's already kind of recovered, coming back toward value. It is, I have trouble with this one as well. I think it's developed a really good range, and the range is what it is right now, which means anything above 20 is kind of overvalued right now. Anything above 22, you can see. Value is a flat VWAP here between 12 and 14, call it 13. And then way undervalued is somewhere down here where we may not get to. So this one looks like it's kind of found its range for a while. And I'm kind of letting it do its thing. I'm going to let it play out. I could see a scenario here with this recent selling pressure. I could see a little bit of a short-term bounce scenario coming up ahead. And the fact that we've gotten close to VWAP, it's not bad. It's not bad, especially within the trending market. But we've kind of developed wide range of price action here between 10 and 22, and we could do anywhere in here right now. That's a little bit tougher here from an actionable standpoint. We also have Serve, which is Serve Robotics. And this one here also got hit when NVIDIA divested. It eventually got a little bounce back. Percentage-wise, has done really well. Call it 5 to 18. But really hasn't recovered all that early momentum from before those comments, and has stayed mostly flat VWAP as well. So, again, with both of those right now, I'd let them develop a little bit more if you're not already in a position to see if they can provide a better entry opportunity. I could see, like I said, with the recent one here, I could see a scenario where we get a little bit of a short-term bounce back, but we're kind of stuck within larger ranges here. So I'm going to reserve more judgment on those and continue to watch. But thank you for those right there. I will talk one last group here. One last group. We'll talk. We'll skip space and we'll talk quantum real quickly. Like NLR, NLR is the ETF for the nuclear group. There's QTUM, which is the ETF for the quantum group. This quantum ETF has been tremendous. Big time movement to the upside. We looked at this one, down below, and it was cheap. It really made its moves. We talked about this one a little bit before. That's a really good way to expose to quantum, because it also has other larger companies that are investing in quantum that aren't quantum specific and actually make money. So it's really, really good way to offset some of that risk. If you look at QBTS, this is the one I wanted to point your attention to. This is D-Wave Quantum. IonQ and Rigetti has some levels as well, but I'm going to focus on D-Wave for the last one that we're going to look at here today. Great key range. The 100% target. Yeah, so I missed this question. By the way, for the key ranges here, the way I mark a key range is there has to be an impulsive move, either an impulsive rally or an impulsive sell-off with clearly definable strong high, strong low. And then once those edges are created, you have to get back to the midpoint of that range very quickly, and that creates what I call a key range. And now the multiples are based off of that range. So that's 100% of range, call it, 100%, that's X. So then this is the top of the range plus X gets you here. The bottom of the range minus X gets you here. And that's how I do it there. So if you get a great definable impulse move, oftentimes it's setting up the energy for a play to that extension, one or the other. And a lot of times we're focused on the upside extensions in bullish markets. So yeah, that's how we're doing that, and it's uncanny how well these things work under the right circumstances there, and we tend to do really, really well. So that's why I really like when you get into a very bullish trending market. When you get into a very bullish trending market, you tend to just kind of do this. And when you're doing that, you don't have a really good frame of reference for range and where we're going. You just continue to just check mark, check mark, check mark, check mark. But then when you get that one impulse sell-off and bounce back, that creates a good key range. And now those give you measurements for where we're going and trap zones above and below. And that's what happened here. Pull back, bounce back, and now this gives us edges to work with. For example, now I know that 21 level could be a great entry for a return back to the top of the range and maybe down the road to the 100% target. That'd be a triple plus 250% or more. So I can start to line up where I like things here. I'm thinking that because this move was so aggressive on a lot of these industry groups and we found those strong highs, the reversion to the mean trade is in. I feel like we have to be patient here because we might get more pullback into these lower levels, and when we do see some of these lower levels hit, that might be the next time to pounce. 15 back to 30. We're at 30 now. Up to 45, up to 60. That's where it's at. So being patient on some of these. I love that we have key ranges here. We have some high beta groups we've been following. It's been pretty active. It's been a lot of fun. We got new and improved pro signals for the PivotBoss Masters members, and we'll be handing those out to those of you a la carte as well who are not Masters members. But it's been an active market, increased volatility market. You have to mind your risk, but there has certainly been tremendous amounts of potential here. So a lot of good stuff here. You can find us here at the PivotBoss Trading Room. It's a Discord trading room. If you don't know, here's the link right here where you can check out some of the offerings there. You can jump in to the trading room. Of course, PivotBossMasters.com is where it's at as well. The recent Masters live sessions have been really well received so far, and we're about to do another round here. So if you take a look here at this link, you can learn more about PivotBoss Masters and what we did here recently, which was the thrust reversal signal. We've now included more pro signals as well for our members. It's been pretty fun here for the PivotBoss community as we head into the middle part here of Q4 for 2025. Doing a lot of work here with TradingView as well, in addition to Thinkorswim. So a lot of fires here burning in a good way. A lot of potential money-making opportunities as we finish out the year. Join us in the PivotBoss Trading Room. As always, thank you very much for joining me for the November 2025 Market Outlook. Everyone have a fantastic rest of your day. I'll see you in the trading room. Y'all take care.